Welcome to Be Bright Finance. So in the last video, we had looked at saving our money in a savings account or saving it in an investment account where it would gain some interest at the end of the month or at the end of the year. So today we're going to be looking at different investment products we can invest in rather than putting our money in a savings account. So if you haven't subscribed, consider subscribing the channel to support it. Then you can also go along and follow us on Facebook at Be Bright Finance, then X, then TikTok. We're also there at Be Bright Finance. So today we're going to be looking at different investment products. So on our investment products, as you can see there, the first investment product you have is investment funds that have a risk profile of 1 and require a minimum capital of 500 shillings when in Uganda. I don't know about your country, so you can check you require a minimum investment capital required in your country. Then they offer an annualized return of ranging from 9% to 13% depending on the investment fund. Then they require minimum capital and are suitable for capital growth and liquidity management. So depending on where you are, let me first talk about the regulators here. For example, when referring to Uganda, I'll be talking about the products that are regulated by our two regulators in the country. That is the Bank of Uganda and the Capital Markets Authority. So you have the equivalent in your country. You can go ahead and check for the Capital Market Authority in your particular country. You can go visit your search engine and type in Capital Market Authority, then end with your country, then the search engine will be directing you into your regulator in your particular country. But for Uganda, we shall be checking this. I've put there the URL. This is our regulator. You can go ahead and visit the website and choose from there, as we shall see the different investment funds we have in the country. Then on number 2, we have treasury bills. They have a risk profile of 2 and they require an amount of 100,000 shillings, depending on where you're accessing them from. If you are accessing them through a Capital Market Authority, a regulated broker, they may be at a quite different price, and they offer an annualized return between 3% to 12%. That's they come under, they require basic understanding of how they work, and they are suitable for capital growth and medium-term liquidity. So treasury bills come in 3 months, that is 91 days, then come in 180 days, and come in 365 days. So that's why they are suitable for mid-term liquidity. Remember, your money is going to be locked in until that period is done. Then for the investment funds, you can withdraw your money anytime as long as you need it, though your broker will advise you on how, or some brokers may have their own policies regarding their withdrawal, but some they allow you to withdraw your money anytime depending on the policy they have. Then besides that, we have treasury bills. Treasury bills also require a minimum capital of 100. This also will depend on whether you're accessing them through a licensed regulated broker by the Capital Markets Authority Uganda or your bank. So your bank, you can be your agent and you can get it at 100,000. And also same applies to the treasury bills. When you this minimum 100 capital required, that refers when you're going through a bank as your agent. So they also offer an annualized return between 10% to 16%. Then you require some basic understanding of how they work, and they are suitable for cash flow, as your amount is going to be locked in for that period of time, and you'll be receiving something called a coupon that you received every year. It's annualized, so though the payments come every after 6 months, so they get that coupon for the whole year and divide it into 2, so that every 6 months you get half of that money. So they are good for cash flow. Then besides that, there is farming. Farming it will be based on your understanding. This is personal. This is not regulated by the Capital Market Authority. Then real estate also is not regulated by the Capital Market Authority. So this one also will be depending on you. And I consider just Google search this. In Uganda, maybe you require a minimum of 10 million, depending on the type of real estate you're going to be doing. So they require advanced knowledge. You must have understanding of these two before you go into them. They're good for cash flow and liquidity. This one is good for cash flow, then another is suitable for cash flow and capital growth, depending on how you're approaching it. Then next on the list is equities or stocks. So equities are regulated by the Capital Market Authority, so you can visit the Capital Market Authority website, Uganda, and see the different companies or stocks you can invest in. And with a minimum of 100,000 Ugandan shillings, you can get some shares at the minimum lot side on the exchange there, which is the Uganda Security Exchange. And there's also another exchange, is 100. So, and the share prices range depending on the company, the price of the share of the company, and also these ones require advanced understanding of how the equity market works. Then we have forex trading and crypto. So these ones are maybe forex maybe is regulated by the Bank of Uganda, depending on what you're doing. But they are also the ones you normally see on social media, people talking about maybe regarding exchanges that are not rather this Ugandan Security Exchange, but other exchanges in different restrictions. So they're also regulated by the governments of that side. So even though you'll be going into for forex trading, make sure that you're dealing with a broker that is regulated by law, so that you guaranteed the safety of your investment. So last and least is nothing. That's when you invest nothing, and the risk of not investing is at 10%, and you're living based on luck. So that was just by the way. So these are the investment products we have. So here we shall be referring on this since that I'm based in Uganda. I'll be talking about investment products most of the time that are regulated by Bank of Uganda and the Capital Market Authority. So depending on where you are, there are identical products that are related to this and are regulated in your own country. As I told you earlier, you can go on the site and type in Capital Market Authority, then you put the name of your country. They will show the respective regulator in your country. Then you will see identical products related to this I'll be sharing about on this site. So I'll give a hint on our first product we should be looking at. Those are going to be the unit trusts. So we're going to be looking at the first fund, which is the money market fund, which has I told you these investment funds are suitable for capital growth and liquidity management. It requires minimum or no knowledge in the underlying assets, because money will be connected from different people and pulled together and allocated to the assets of the particular scheme this money market fund will be allocate the different assets in this money market fund. So you can go ahead and visit your brokers, your unit trust fund manager, and their schemes. You'll be seeing the different assets that they invest your money in, but most of them will be one of these here you're seeing here. So they will be balancing between these, and they are doing the risk management for you, though they will have also their own risk profile that you'll be have to go through to consider, because we have different unit trust products. We have bond fund, we have balanced fund, and we have the first, which is the money market fund, which is having most of across all brokers, which is having a conservative risk profile. So you'll be going ahead and checking all of them and their risk profile, so that you choose the one accordingly that fits your risk profile. So today Today we are going to be listing some of the money market funds in the country, and the first one will be the Stanbic Money Market Fund, and we shall be sharing with you the different rates. But you can also go along and check the Capital Market Authority as I shared with you, and you check on the different additional information that the fund offers. So here I'll be giving you a summary of all these. So as you can see on the list, you can see that the Stanbic Money Market Fund, as of March 2026, it gave a price change of 10. This is in percentage. This is how they have been changing the return they have been offering. So as you can see, as of March 2026, they got a 10.7% change. Then on the 2025, you see that their average was at 10.62%, as you can see, as you can go along and see. Then their benchmarking, the one they're benchmarking with is at 8. So that means they were far by 2% from their benchmark. So the benchmark is normally used to see the performance. That means they were above their the one they used to benchmark. Then next we shall have Zeno, the Zeno Money Market Fund, and that is their respective annualized return. This return is annualized, okay? It's not monthly basis, it is annualized. Then we shall go on to Old Mutual Money Market Fund. This is their returns. They are also annualized. So as you can see, most of them range. So remember, we said these investment funds range from 9 to 13%. So this is the first bracket. That's the money market fund. There's also a bond fund and a balanced fund based on your fund manager. So this is the money market fund of bit of it, but there are also other funds, other fund managers. You can go ahead on the regulator's side, that is the Capital Market Authority Uganda, and check for yourself other funds. So I'm going to be looking now at the capital required to invest in these funds. Okay, so as you can see, there is also another fund, though I didn't get the details of it. That is the MTN Z Invest. As you can see, it requires little capital that is less than 10,000. Let me go ahead and list that here. As you can see, the investor requires 500 shillings minimum capital, and the minimum investment period is 24 hours. The investor is a partnership between Sanlam, is it Sanlam Alliance now, and MTN Momo, and it's freely accessible. So if you're looking at accessibility and liquidity, for example, you may be able to get your money maybe after 24 hours. You get it, you need it, you get it instantly by dialing a code. Then next on the list, you're seeing Zeno. Their minimum investment amount is 10,000. So everybody is catered for here, ranging on how much money you're saving. Then Stanbic and Old Mutual are having a minimum investment of 100,000 each. There are also other investment funds, other investment money market funds. You can go ahead and go on the regulator's side and see the one that suits your needs. So maybe a tip, it is good to consider having an account that a money market fund account with a custodian being your own bank, as this some of the charges, some interbank transfers attract a charge, right? While when you are transferring in the same bank from from your account, the custodian account, which is the same, you may not be charged. So you should also, that's just a tip in case you're choosing between these funds. So I think that's all about this first fund I've shared about, which is the money market fund. So in the next video, we're going to be breaking down onto how you can allocate these funds based on your requirement and liquidity management. So this is the first layer. And remember, in order to gain more from this investment journey, you're supposed to manage the underlying asset by yourself. So these ones offer liquidity as you're building knowledge. As you can see on the screen, this one requires no knowledge because most of the work will be done by the fund manager, who will allocate them the money to the different assets that this money market fund invest money in. And you may not require knowledge in the assets. The manager will do the risk management for you and allocate the different money to the different assets. But it is good to understand the assets while you are investing in these investment schemes or funds, so that you manage the asset by yourself. That's when you'll be able to make a cash flow out of it. So thank you for watching. So we shall be meeting in the next video. If you haven't subscribed, consider subscribing. See you.